Hello fellow traders, this is Paul Lemmel. Wanted to show you a stock here called Warby, W-R-B-Y, Warby Parker. They make eyeglasses. But first, before we dive in, make sure to smash that like button and subscribe. It really helps us reach more traders like you and keeps you updated on our latest trading tips. Let's scroll out and look at the big picture first. You can see right here this was in a pretty big downtrend over couple years to 2022, 2023. Let's look at the key cycle right here before we actually got a low that would hold. Let me see what that cycle is. That is, it's a 1.5 year plus cycle. And you can see right here, once we found that bottom right there, we got a retest that held above it, another retest that held above it. So we got a pretty good strong support down there at $11 area. Another thing I like to look for on these mushy bottoms is a 6-month high forming before you enter a trade. So basically what you have right here, you have the first 6-month high. It's right at 6 months, and 6 months 127 bars, and you have a TSS pullback off of it. 1, 2, TD9 pullback south channel. So that did set the bottom, and then you got one more 6-month high right here. 6.5 months TM1 cycle off of that, and that retest held. So very good clue when you're unsure about whether you got a true bottom is to look for a 6-month high and play a TSS cycle pullback off of that. And once we get that established, now we're just basically retesting that. We had a strong CCI signal right here, actually right at the exact bottom. Same here, we had a CCI level signal right there on that bottom, so that was pretty strong there. If you're unfamiliar with any of the trading terms I'm using, you can find our club lingo at bigkahunatradingclub.club/lingo. So we had a 0.5 BMI breakout, vector of 2, it's pretty strong. CAT-3 and a pullback, TD6 cycle there, TM1, and we're at TM3 right now, pullback off of that. We got earnings on October 7th, and it's acting pretty good before earnings. Like with anything in stocks, you got to cut your risk levels, or just got to mitigate your risk levels. So if you think that if you got a strong feeling for the stock based on fundamentals, etc., you can go a little bit higher. It's generally a good idea to keep your risk per trade to less than 5% of your account per trade. So that would mean either buying options on it, or just mitigating the risk by not buying too many short shares until you get through the earnings. You know, whatever way you decide to do best. But right now we get so far a soft landing pullback off of that peak, which took out the prior pivot high. And so it's basically wave 1, wave 2. And if this 1750 psychological price point holds, then it could be off the races on that November 7th earnings. Got a lot of room to run. Again, we have overhead supply back here, but it's distant overhead supply. By the time you get down this far, you've shaken out a lot of the traders who got burned up here by holding on to it. But we have rinsed out a lot of that selling pressure, although you'll still run into some of it at different levels going up. Right now it looks pretty good. Warby, W-R-B, Warby Parker Inc.